I am AI avatar of CA Ratan Mundra. In this video, we will understand an important regulatory update related to foreign direct investment, commonly known as FDI, received by regulated entities operating in the International Financial Services Center, or IFSC. The Reserve Bank of India has issued a clarification through revised answers in the FAQs on annual return on foreign liabilities and assets, also called FLA return. This update has been made in consultation with the International Financial Services Centers Authority, known as IFSCA. The clarification mainly explains how investment data received by regulated entities in IFSC will be reported. It also clarifies that IFSC regulated entities are not required to file the FLA return directly with RBI. Instead, IFSCA will separately issue instructions for submission of necessary data. Therefore, regulated entities should not rush to make direct FLA filings and should wait for further instructions from the authority. Before understanding the reporting requirement, it is important to understand what IFSC and regulated entities mean. IFSC stands for International Financial Services Center, and in India, it operates as a special financial jurisdiction for international financial services. Entities operating in IFSC may include banks, insurance entities, capital market intermediaries, fund management entities, and other financial service providers. These entities are regulated by IFSCA, which is the unified regulator for financial services in IFSC. When foreign investors invest in such regulated entities, the investment may look like FDI from a data perspective. However, because these entities operate under the IFSC regulatory framework, the normal FDI compliance treatment is different. This is why RBI and IFSCA have clarified how such investment information should be handled. Many regulated entities in IFSC may receive foreign investment from overseas investors. In normal cases, Indian entities receiving foreign investment may have to follow FEMA-related reporting requirements, including the FLA return where applicable. However, IFSC regulated entities work under a different regulatory environment, and this created a question. Should they file FLA return with RBI or not? The clarification was needed because RBI still requires investment-related data for India's balance of payments statistics. Balance of payments data is important because it helps India track foreign investment, foreign liabilities, and international financial flows. At the same time, IFSC regulated entities should not be treated exactly like ordinary domestic entities for FDI compliance purposes. Therefore, RBI clarified the reporting position so that entities know the correct authority and correct process. The press release states that RBI has revised the answers to question numbers 43, 44, and 45 of the FAQs on annual return on foreign liabilities and assets under FEMA 1999. In addition to these revisions, a new question number 46 and its answer have also been added to the same FAQ document. This means the clarification is not a general informal statement but is linked to the formal FAQ framework maintained for FLA reporting. The FLA return is generally used to capture details of foreign liabilities and foreign assets of Indian entities. But for regulated entities in IFSC, RBI has now clarified that a separate approach will apply. The revised FAQ answers should be read carefully by compliance teams, finance teams, and regulatory reporting teams. The purpose of the revision is to remove confusion and create a clear reporting path for IFSC regulated entities. One of the most important clarifications is that FDI norms do not apply to investments made in regulated entities in IFSC. This does not mean that foreign investment information is ignored or becomes irrelevant. It only means that the standard FDI norms applicable to ordinary Indian entities are not applied in the same way to regulated IFSC entities. The reason is that IFSC entities are governed by a specific regulatory structure under IFSCA. However, the data related to these investments is still required for India's balance of payments compilation. So the compliance responsibility shifts from direct FLA filing with RBI to submission of necessary data as instructed by IFSCA. This distinction is very important for avoiding incorrect reporting and unnecessary regulatory filings. The clarification clearly states that regulated entities in IFSC would not be required to file the FLA return with the Reserve Bank of India. This is a major compliance relief because entities were earlier uncertain whether foreign investment received by them needed to be reported through the regular FLA return mechanism. Now, the position is clearer. IFSC regulated entities should not file the FLA return directly with RBI only because they have received foreign investment. Instead, they should wait for the instructions that will be issued by IFSCA. This also means compliance teams should update their internal checklist and remove unnecessary duplicate reporting steps. At the same time, they should maintain proper investment records because data submission will still be required. The key message is that the reporting channel changes, but the importance of accurate data remains. The press release further clarifies that IFSCA will issue instructions to regulated entities for submission of the necessary data. This data will be used for compilation of India's balance of payments information. In simple words, IFSCA will act as the regulatory authority that guides IFSC entities on what data is required, how it should be submitted, and when it should be submitted. Regulated entities should therefore monitor future circulars, directions, or communications from IFSCA. Until those instructions are issued, entities should not assume the format, due date, or reporting method on their own. They should also ensure that their internal finance and compliance records are ready for future reporting. This approach will help entities respond quickly once IFSCA issues the detailed instructions. From a practical compliance point of view, this update has three major impacts for regulated entities in IFSC. First, they should review whether they have received any foreign investment or capital contribution from overseas investors. Second, they should confirm that they are not filing the FLA return directly with RBI unless separately required under any specific instruction. Third, they should prepare investment data internally so that it can be submitted when IFSCA issues further directions. The data may include investor details, amount of investment, date of receipt, nature of instrument, and related financial information depending on future instructions. Entities should also keep board approvals, subscription documents, bank records, and regulatory approvals properly filed. Even though FLA return filing is not required with RBI, record keeping and readiness for reporting remain very important. Compliance teams should take a structured approach after this clarification. First, they should circulate this update internally to finance, legal, compliance, and management teams. Second, they should update their compliance calendar to show that direct FLA return filing with RBI is not applicable for IFSC regulated entities based on this clarification. Third, they should create a separate tracker for foreign investment received by the entity. Fourth, they should keep watching the IFSCA website and official communications for further instructions. Fifth, they should avoid making assumptions about forms, formats, and deadlines until IFSCA issues clear guidance. This will help the entity remain compliant while avoiding unnecessary or incorrect filings. To conclude, the RBI press release gives an important clarification for regulated entities operating in IFSC. The first key takeaway is that FDI norms do not apply to investments made in regulated entities in IFSC. The second key takeaway is that these entities are not required to file the annual return on foreign liabilities and assets or FLA return with RBI. The third key takeaway is that investment data is still required for India's balance of payments compilation. The fourth key takeaway is that IFSCA will issue separate instructions for submission of such necessary data. Therefore, IFSCA regulated entities should wait for further instructions from IFSCA and keep their records ready. This clarification helps remove confusion, reduces duplicate reporting, and creates a clearer compliance path for IFSCA regulated entities. Moon Says and Management Consultants LLP, a trusted partner for SEZ and IFSC excellence, a pioneer in establishing SEZ and IFSC units within GIFT City in India, delivering end-to-end IFSC setup, operational support, and handling compliances, risk management. Renowned for deep expertise in regulatory approvals, capital markets, fund management, insurance, finance company, foreign university, BATF, and ancillary regulations, and fintech. Expertise in customs clearance for aircraft and ship procurement, leasing, GST, DSPF, IFSCA, comprehensive support covering registration, reporting, and regulatory transitions, ensuring ring fencing, transparency, and global compliance standards. Join our network. Scan the QR codes below to stay connected with us.